and we're going to take a look at the markets. Before we go live though, as always, let me just ensure that we actually are live. We should be. Yes, we are. So good morning to you guys, and you're most welcome to write to me in the chat box. There should be a chat box there, so you can able to write to me. Fortunately, on my side, I can't actually see it, so hopefully it's available on your side. But it's gonna be probably a bit difficult for me to actually see what you guys are writing to me. So I'll figure this out in a few minutes or so. Okay, so let's begin. And we're going to take a look at the markets. And it's a bit quiet today. Unfortunately, it is. The only market where I'm seeing a bit of activity right now is of the majors, that is the Aussie dollar versus the USD. And then crude oil is down as well with 0.5%. Otherwise, it's a bit quiet, unfortunately. But let's not despair. Let's take a look at the market so we're ready for the moves when they happen. Okay, so this is your euro versus the USD. So the price has 2 times touched that head and shoulders target that we shared with you guys here at Trade Captain, sorry, at ATFX, and the trend remains bullish for now above 112.27, which is this level down here. Now, it's not often I look at a 1 hour chart, but I'm doing that today, or a 6 hour chart. And I think we might go down. If we do go down to 12.75, I do think people are gonna buy. Then they're gonna try to lift price to maybe 113.50 and then maybe 114. Because I do think we'll continue to trade sideways here for longer. And for now, that shorter momentum will probably continue to last for a few more days. Now this is the GBP versus the USD, and if I flip to a 1 hour chart, you can clearly see here that we're working with ascending triangle. You have that upward rising trend line, you have that 1, 2, 3, 4 levels of resistance, and it does suggest that we should go to the upside on a break to 13.25. So that's something to pay attention to. I think this is sort of the level where people are going to start to buy again, and they will have some stop loss orders probably up here as well. So when these orders being stopped out, it can trigger a bit of a lift to the upside. As for the big picture, which is my preferred, it's sort of these two scenarios go hand in hand because, as you know, the big picture trend is bullish, has been bullish since the market bottomed out here at 124.39 in January this year. You have a low here, low here, low here, and then you have potentially that new low here, which will hopefully be confirmed on the break to 131.25. So hopefully we can get a bit of action. As for the dollar yen, it's relatively unchanged. There's not a lot of activity here, but we're still working with a head and shoulders. You got yourself a left shoulder here, created on March 8th. You got yourself a right shoulder created on March 10th, and then you have the head created on the 25th, April 10th. And here, with that break, we should have had that momentum. But as you know, all markets are very, very sluggish right now. There's not too much happening. So people, I guess, are taking a bit of a step back. I do think, though, that if we go down to maybe 111.50, I think people will buy if they're not going to just lift this already altogether, doing it now. But don't get too enthusiastic. If you look at it from a big picture perspective, it does look like the market will continue to trade sideways for longer. This is a daily chart. You can see that's a big level here, capping price. This is the May 2017 high, and then we had several highs. Now 1, 2, 3, 4 highs at the same level, which is the 114.57. Take that level out though, and we'll have some very good price action. Gold prices is today gonna be the day. With the market, they tried to trade lower already on the 29th of March, and then a real serious attempt on the 4th of April. It's now been, well, a bit more than 10 days, and the market might have another go at it. So you have the April low and the March low at the same level, so it is an important level for the markets. And on a break to 1280 on this chart, the market could continue to trade lower. You always need to figure out the level with your broker depending on how they derive their prices. But just below the March low, April low, I think we're gonna potentially have a bit of a bearish move, and it's looking good if we indeed have that, because we have a head and shoulders, head, left, right shoulder, and if the stop will go just above today's high, then you're looking at a risk reward ratio of 7 times the money if we hit that head and shoulders target. So it's definitely something that is interesting to keep an eye on. As for crude oil prices, they are going lower, which shouldn't come as a surprise, The market is has been a bit overbought for quite some time. The idea was to book profits already here, and then the market decided to trade a little bit higher. I think we can go down, and I think if we start to trade below the low here from April 5th, I think people are gonna start to get a bit of panic, and they may push price a little bit lower. Levels I identified is interesting. I did this just taking a fib from the low to the high. It's the 50% level, 61.52 and 60.74. So that is the market or the levels I'm watching. As for the S&P 500, the market just about to hit that head and shoulders target, as you can see. Identified this head and shoulders target, and we set a break to the upside. It's probably going to lift price towards that target. The futures markets are not clearly about to reach those levels, and we're not that far away from those all-time highs, which is obviously very encouraging for people, the buy and hold investors, but anyone really, except the bearish crowd. I think here, we'll probably go a little bit upwards, a little bit lower. And then eventually, I think we're going to reach that 2018 high. And I do think we're probably going to try to test that and trigger all those stop loss orders. And then depending, as I said yesterday, on the reaction. If people in the media gets very cheerful and say, oh, look, invest your money in the stock markets. The stock markets is where you need to have your money. Those sort of headlines, in particular, if you see that in mainstream media, then, that will be an indication that maybe we've found some sort of a short-term high. But if people are very like, oh, but we have the problems in China, we have the problems in Germany, I don't understand, then that could be viewed as an opportunity to buy, not necessarily buying the breakup, but to be bullish on this market. Because that would tell me that a lot of people are not convinced. But when everybody's convinced that the market is going to head higher, at that time we're probably going to find that short-term high and that pullback that a lot of these bears are looking for. Now, next market is the German DAX, and the German DAX, look, is breaking to the upside. It's probably why the S&P is up the way it is. It's taking its cues from the markets here in Germany, and it's that head and shoulders we talked about. I believe all markets are going to give you maybe 1 to 2 really good setups per year. Sometimes it's definitely messy, but we have been bullish the DAX here from the initial head and shoulders, which was here. And then we tried to be bullish, I think, here as well. We got stopped out. And then the last sort of very good setup was this one here. And it's going good right now. Because the idea was buy on the breakout. And the breakout happened on April 4th, April 2nd. Put the stop loss below that level. So if one would have done that to the exactly as suggested, say we would have used the close price. So entry would have been here. And right now you would be floating a risk reward ratio 2.28. If you put slightly higher risk like I do, like 1.5%, then this would be slightly more. Say for the sake of it, 2%. So you'll be up with about 4.4% right now. But the target is up here for the risk reward ratio, almost 5 times the money. So put 2% risk there, then that's almost a 10% move. Put 1%, then that's 5%. Depends really where you are in your stage in trading. Like, I know that in the beginning, a lot of people don't necessarily have a lot of money in their accounts. So for them, they're looking for, monetary numbers like, oh, I want to make a few thousand here or something like that. But eventually, when you mature, well, not when you mature, I know all of you guys are mature, but eventually, the typical trader, when they mature, they start to look at percentages. And the percentage is obviously different for a small account than a big account. Like if you talk with a big investor, they're just looking to make a few percent every year, 10%, maybe 15%. That's what they want. But on the other hand, they don't want to have any risk on their money. They don't want to see 10% declines or less or lower than that. For me, in my personal trading, I'm looking for a return of about 35% per year, and I'm happy to accept higher risk at 22% or 25% of my capital per year on an intra-year drawdown. I'm happy to do that, especially as I'm ahead. Put some money into the account and I'm ahead. So I'm speculating really with the market's money, so to speak, because it's still there. Of course, it's not everything I do. I have pension funds and have savings and things like that. But for the trading account, I'm happy to take on that risk. So reason for saying all this is that If we just get 2 or 3 of these a year, you know, 5, 10%, say it's 10% for the sake of it, then I would reach my target more or less, 30% up. And then on the way to getting there, there's just a ton of sort of retracement, false moves. It sort of happens all the time, and it's just part of what we're doing when we speculate. Okay, I think we have pretty much completed the market setup. Let me just market overview. Let me just see here if I can see your questions, because for some reason I could not see them. Market is being, not the market, but my browser is being a bit weird. So let me see if I can just load your questions. If you have any questions, if you don't have any questions, then obviously, okay, so for some reason it's not even possible to see this video at all. Okay, I'm not really sure why I can't see it. I can see that we have zero comments so far. I think there's some restrictions within the office here. That's why I can't see it. Okay, guys, I can't see any comments anyways. We're gonna wrap things up. Guys, I want to thank you so much for joining me this morning, and I hope you guys have a good trading day. If you have any questions during the day, just go to AlexFX00 as well. If you have any questions about ATFX or anything else, you're most welcome to email at alejandro.zambrano@atfx.com. Don't forget to check out that we have very good spreads with ATFX, and we have a deal right now ongoing where you can get coaching. So if you sign up with ATFX, you get access to 2 30-minute sessions of coaching by myself, and we're working as well some premium content, and we're talking about educational content, and that's going to be released probably this time next month. And we're working on that. As you might know, I used to produce a lot of content, educational content. I think when I was working for some of the other brokers, like every month we had a session in their office in London, and across the years there was literally millions of deposits and about 320 people I had the pleasure to teach the basics on how to trade the markets. We're gonna do something similar, but what we're gonna try to do is that we're gonna try to do more premium, more sort of explaining to you what you need to trade the way I'm trading, and new trading system release. If you don't have a system, that would be a really good opportunity. But it's really there's an act of urgency, definitely, because right now, because ATFX is a new broker in the UK, all the different deposit levels and things like that are very low to access this content, and they will move up. So think about that, and if you have questions, let me know. Guys, have a good day, and I'll see you guys tomorrow, same time here at ATFX YouTube channel. Thank you.